It's all scam right now, guys. It's all pump and dump. Pump and dump, guys. Pump and dump. It's all pump and dump, guys. Pmcb, CMPP, try to. It's all pump and dump, guys. Pump and dump. This one too. Just small side right there, guys. Just small side. Everything go down. All pump and dump. Rubber scam. You see right here, breakout, pump, dump it. I just jump in right here for fun. Right here. What the price? Let me price. 16, 17, 18. That's my price. Crazy. You go nowhere, guys. Nothing going. Nothing going, guys. Look at this one. It's all pump and dump too. And this one too, pump and dump. Boom. Crazy. Very hard to trade, guys. Pump and dump. And this one too. Where the market open, let's just get in right here for fun, right here. Couple dollars only. What my price? I got in. Only this one look good. OC. This one look run right now, guy. Only this one look good. Let's see how how long can it dump. It's all dumping. Pump and dump, pump and dump, guy. Come on, keep going higher, okay. Only that one look good. How high can it go? Alright, let me sell some here. I sell some here already. Buy and sell, guys. Buy and sell. Sell. When it pump, I'm out. This one look like breakout, so look like breakout right there, okay. Just sell some right here. Hey, buy right here, sell all the way up here. Make a couple cents for fun. Sell some here, sell some here. Sell some here. I sell already. No more, guy. I still have this. Come on, break it. Break it, baby. Break here. Come on, break. I keep. Look at this on the dumb right there, guy. Look, I see. I saw it dumb. Perfect, guy. When it start, get in. Come on, don't break it. Break it so I can dump more. Come on, break it, baby. Couple cent learning, yep. Couple cent learning, guy. Come on, man, come on. I buy the dip right here. Look at that. It's all scam, guy. Crazy. Very hard to trade. Cannot break right there. Look at this. See, I saw right there, guy. I don't trust nothing. Look at this one, same thing. Look at them. Look at them right there. Resistant right there, that's why. Resistant, guy, resistant. Okay, the plan right here, this one plan. Right here, resistant, resistant, break here, A plus. You can buy some over here, down here, you get out all. Stop down here. Đơn giản như vậy thôi. The tree in rain right here. You try the bowl class and see or not. You just You can buy some here and sell all the way here. That's it. Right. Yep. So we got 25. Let me stop right here, 25. My stop price is, let me see, 15.99. $17.22. Come on, break it, baby. When you go down right here, I let it go to right here. If under here, I'm out. At the VWAP right now, guys. VWAP. Or on the VWAP. I watch out this one right here, try to break right here, 110, and see what's going on. It looked like it tried to break 110 right there. I buy more when it break 110. The market is crazy, guys. Very hot. Volume, come on, volume pick up. Look, this one try to dump it. Crazy. Hate that. Hate that guy. Look at this one. You guys see this daily chart right here? Look, cannot break right here. 115 guy. Look at daily chart. Very heavy resistance 115 right here. Crazy right here, guy. You see that? 115. You need to break 115. If not, very hard to break. Car try to break right here. Remember yesterday I put the note right here. Yesterday crazy. The market just pumping down, fucking shit. Crazy guy, not easy to trade. Look at that. Look at that guy. Look, this one right here cannot. This is a good one. The view in the triangle right here. The fighting right here, guys. Look at that, it's crazy. I know it's annoying, huh? Why so long, guys? Why so long? Waiting so long. This one down here, I'm out 99 cents. $0.99, guys. Down here, I'm out. Okay, 95, I'm out. Down here, let's see, 95. $95, I'm out. I have the plan, this one break, I get in, 95, I'm out. Crazy, market stuck right there, guys. You go nowhere. This one right here, I have a couple of shares. I tried to run my price 26.75. Look, it cannot, crazy. 26.75, couple of shares only, cannot make money. How can you make money when you double, triple? Crazy. This one too. down here, see? I'm out right here. 1570 I'm out. It's all scam, guy. Look at this one, OC. This is a good one. I trade this. I take profit already right here. Now profit on this one. This one not yet even. Try right there. Crazy. That's it, guys. Today the market sucked. Nothing happened. What a slow day, terrible day. A lot of volume for nothing. See, look at this one. I'm out right here. I put down my stop at 15, 17. 1570 I'm out. Right here, somewhere here. Maybe here I'm sell some right here. Crazy. This one, I think we're not patient enough. Don't complain. You need to be patient, that's all. You need to be patient. This one I buy the dip right here. You need to break right there. If not, you out. Okay, you go over here to VWAP, maybe I'm out. Not the plan, guy. Not the plan. Plan. Look at this one. My stop down here right now. Annoying, guy. Annoying. Very annoying, guy. Right here I'm out. I'm out right here. So the broker, they make money on the short interest, guy. They make money on short fee. Make money on the short. Look at here, my order just filled. You hear the sound? Right here, it's dumb right here, guys. Look at that. I just saw right there. Crazy guy. Crazy, huh? You see that? It's scam, huh? Dumb right there. That's the way it is. Nope. Very hard to trade, guy. I got 27, 17, so right here. 1549. You touch it. Crazy. Scammer. He hit right there, guy. Crazy. My stop, I put up 1570. Crazy. It hit the bottom right here. Crazy. Crazy, crazy, crazy. Very hard to trade. Come on, break beware. This one tried to break right now. It try all the time, okay? Look at that guy. I don't trust it. Because anybody try to see it break 110. Volume pick up right here. This scam guy, look at that. You say, you see OC, look at OC guy, breakout. Nice triangle, huh? Look at that guy. Oh man, we trade too many. That's why. Look at that. My triangle. Ain't no squeeze right there, guy. Crazy. Ain't no squeeze. I know, guy. You jump in right there, guy. That's it. It's hurt, huh? We look something else, not the problem. I think 3-1 stock only. Something you make money, hold on and see what's going on. I try to hold on this guy right here and see. Come on, break it. Break it, baby. Break it. Look at that candle, crazy. Oh, dumb man. Pump and dump right there. Yep, focus on one only. It's okay. Sometimes you're mixing out. Sometimes you're mixing out. Come on, squeeze it. my eye see it look good. My eye say look good, and see. Some here. See some there, some there, some there. Right here, 215, 115 resistance, and see what's going on. 115 important. Look at them right there, crazy guy. Last short right there, 114.15. This one under the VWAP, I'm out. Right here. Right here, guy. Just focus, make some money, that's all. Don't be greedy, guy, don't be greedy. Look at, try to dump right there. Only this one good one, look at that guy. All the way. I say I was 6 something, 640. Go to $1 different, crazy. $1 different, guy. This one doing good. Come on, rewrap. Come on, break rewrap. Go back up here 30. Told you guys 30, very hard to break 30. Yesterday too. Today and yesterday, look at it. Yesterday and today I said 30. Look at 30, guys. Not easy to break 30. Look, right there, yesterday. Yesterday I said right here, over 30.9. Stop right here under 30. Look, when you stop under 30, boom. Come on, break it, baby. This one, look here, daily chart. I show you guys. Look at daily chart. See, it cannot break right here. You see that? That right there, guys. Very hard to break right there. When it break right there, it's A plus head up. Okay? It tried to break right there. Right here. 120. Cannot break 120. Guy. 115 and 120. It's building the ball plot right now. Where the volume guy? No volume. Come on, another triangle and see what's going on. Down here, I'm out. Right here. I don't care. I'm out right there, okay. He tried to break down right here. Oh man, crazy. Very hard to trade. Look at this one, it dumped, when it dumped, very hard to go up. Look, it touched exactly where my, where is it? Break it, break it, break it, triangle. Triangle, break it. Triangle, look, try to break 15. Fuck. So weak. I'm out. Still some right there. I still have some. Need to break right there. I cannot break right there. I'm out. Okay, this one looked good. Try to curl back up right there. I'm hold on. Not selling. Not selling. Not selling, yes. Not selling yet. This one look like dumb right there. Crazy guy. I'm busy. Busy man. $27.80. Just sell some here. Who fucking care? Got tired of it. Sell some right there. Just sell some, buy some, sell some. Crazy. Too slow. Come on. Come on. Fucking dumb right there, guy. Look at that. What the heck? You see there? Up and down, up and down. Look at that, crazy. It touched all the. Look at that, see? You need to take profit. If not, you do all the way underwater, guys. Yeah. You see that? I almost sell it. I don't want to. I almost. Look here, I got small size. Oh man, look at that. The market's crazy. You make some, you lose some. Look at big candle. Look at big candle right there, guy. Shit, the market crazy, guy. Look at it. Get rid all the junk, guy. Crazy junk, crazy. Got tired. Look at all the junk. You need to sell it. This one I sell right there. If not, crazy, guy. Okay, buy it right here. Alright, that's where it is. Under 98, I'm out all. Just buy the dip right there. Buy the dip, sell the rip. Go nowhere, guy. Go nowhere. Come on, break it. 110 M cell. I see a 110, guy. Come on, VWAP. Break the VWAP, baby. Go nowhere, guy. Crazy. No Super Bowl, yeah. Chicken ball. Yeah, chicken ball. This one need to break 110, I sell again. I just buy a dip on this one right here, 99 cent. 99 cent, guy. Crazy. Lucky I sell right there. I sell right here, guy. Right here, 112 right there, see? Couple hundred share. And jump back in right here. Crazy. If not, big trouble. nothing moving, right? Nothing moving. Crazy. It's whole on $1 right there, guys. $1 is crazy.
I am here to tell you a harsh truth, a truth that will save your capital. Timing is not just a factor in speculation. Timing is the entire battle. The majority of men who try their hand at the great game lose their fortunes not because their judgment was flawed in the end, but because their patience was exhausted at the start. Being right about the what, the ultimate direction of the price, but wrong about the when, the immediate moment of action, is financially identical to being completely wrong. The outcome is the same: lost capital and psychological stress. The market cares nothing for your brilliant analysis if that analysis is delivered 6 weeks too soon. I only make a move when the market itself has made the path undeniable. The path of least resistance must be established. It must be clear. Everything else is gambling. It is shooting in the dark and hoping luck is on your side. The reason most traders fail is profoundly simple. They cannot afford the cost of waiting. They mistake perpetual motion for productive effort. They jump in when the conditions are confusing. They enter the fray hoping their analysis will magically drag the market their way. This is vanity. It is arrogance. We do not command the tape. We follow it. We observe its truth, and we commit only when that truth is shouted, not whispered. We are students of the confirmation, not priests of the prediction. Subscribe now, like this video, and leave a comment. By doing that, you help more people see this message, and you let me know this work is not in vain. The speculator who acts on whim is destined to be a provider of capital for the man who acts on evidence. Let us be clear about where the true profit lies. It is found in the stillness. It is found in the waiting. It is found in the supreme discipline to ignore the daily fluctuations until the trend is so manifest that the market does the heavy lifting for you. You must stop seeking action. You must start seeking clarity. The path of least resistance defined. The fundamental challenge of trading is recognizing that the market is already on a momentum path. It is a mass of capital rolling downhill. You cannot push the mass, you can only join it once its direction is fixed. The path of least resistance, PLR, is the direction in which the line of least expectation, supported by the maximum pressure, lies. Think of a heavy current. Your small vessel does not create the current. Your small vessel must align itself perfectly with the prevailing flow. To row against it is exhausting. It is unprofitable. It is ruinous. Your first step is not to analyze a stock or a cotton contract or a commodity. Your first step is to analyze the pressure on the entire market. The general condition dictates the fate of the particular. If the overall trend is down, if the pressure across the exchange is manifestly bearish, even the best stock with the finest earnings report will struggle upward. It will meet resistance at every turn. If the pressure is up, if the market tide is rising, even bad news often fails to drive prices lower for any significant duration. The buying power simply
just little more
filtration.
talking.
You must wait until the market explicitly confirms the direction of the major trend. You must wait until the trend has gathered enough force to crush the opposition effortlessly. This confirmation removes all ambiguity. Only then, only when the path is undeniable, do you commit serious capital. To speculate against the PLR is not trading, it is defiance. Defiance is the most expensive luxury on Wall Street. Most men look at a stock and ask, why should this go up? The professional looks at the entire exchange and asks, what pressure is acting upon all prices? If the general market is weak, even a strong stock cannot defy gravity forever. It will be pulled back by the weight of the surrounding movement. If the general market is strong, even a fundamentally flawed stock will often be carried higher, riding the coattails of mass optimism. The path must be established first. The condition must be defined. Only then do you select the appropriate vehicle to ride that wave. Never mistake a temporary fluctuation for a change in the great trend. The PLR is established over time. It is cemented by volume. It is confirmed by price action that persistently overcomes natural resistance levels. If the market is ambiguous, then the path of least resistance is zero. It is stillness, and your commitment must likewise be zero. The folly of fighting the tape. The ticker tape is the voice of the market. It is the immediate, unvarnished truth of current pressure. If the tape is telling you one story, showing weak closes, narrow volume, and failed rallies, and your analysis or inside knowledge is telling you another, always, always, always trust the tape. The market is never wrong.
Okay, remember this morning 10, I still sleeping, you testing about PL. You say running, I say you FOMO, okay? Anytime you have money in the bank, you FOMO it. That's the problem, guys. Alright? You FOMO, you think it will go right here, this morning right here, 6 o'clock. Right here. At this time right here, you FOMO right here. I said don't touch it. You FOMO it, I can tell. I see dead people, that's why. Okay? Look, you touch right there, I cannot go lower. I am out, that's it. I supposed to sell right here, guys. It's okay, small size, not very big. This one right here, you need to hold right there. Need to hold on the VWAP right here, guys. Under there, I'm out. Right here, the VWAP only. I don't care what else. Here, heavy resistance. Crazy, huh? Cannot break, guy. Right there. Very hard to make couple cents, guys. Very hard to make couple cents.
Opinions often are.
The market never wrong, okay?
The ticker tape is the voice of the market. It is the immediate, unvarnished truth of current pressure. If the tape is telling you one story, showing weak closes, narrow volume, and failed rallies, and your analysis or inside knowledge is telling you another, always, always, always trust the tape. The market is never wrong. Opinions often are. Fundamentals are sometimes delayed. Inside information is frequently distorted, misused, or simply too early. But the price, the execution price printed on the tape, is the final, irreversible judgment of every speculator and investor combined. When the movement is choppy, confusing, or contradictory, what does that mean? It means the battle between buying and selling pressure is balanced. It means equilibrium reigns. During equilibrium, the market is a washing machine. It is designed to shake out the weak and confuse the analytical. Any commitment made during this balance is a guess. It is a 50-50 proposition. You might as well flip a coin. My profits are not built on guesses. They are built on certainties. True timing involves waiting for one side, either the buyers or the sellers, to definitively overwhelm the other. This overwhelming victory creates momentum that feeds itself. It clears the path. It establishes the PLR beyond doubt. The amateur argues with the tape. He believes his logic is superior to the millions of dollars moving against him. The professional observes the tape and complies with its instruction. If the market is unclear, if the tape offers contradictory signals, the correct action is inaction. It is the profitable stillness of the observer. Do not argue with the execution price. Do not fight the movement. If you are a bull and the market refuses to advance on good news, there is a powerful hand selling that you cannot see. Respect that hand. Wait for it to withdraw. If you are a bear and the market refuses to decline on bad news, there is a powerful hand buying that you cannot overcome. Respect that hand. Wait for it to retreat. Fighting the tape is the quickest route to margin depletion and emotional collapse. Your conviction is not currency. Price is. The cost of premature engagement. The amateur rushes into a position the moment he thinks he has figured something out. He congratulates himself on his intellect. He believes he has solved the puzzle before anyone else. This belief, this pride, is his undoing. He believes if he waits another moment, the move will escape him entirely. He suffers from the acute fear of missing out, which is a childish affliction.
Yep, FOMO.
This urgency to act is the definition of impatience. By entering early, you guarantee yourself maximum exposure to minor fluctuations and inevitable shakeouts. The early entry ensures you must endure the highest psychological stress. You must endure the market testing your conviction. The market makers, the powerful interests, do not want to carry you along for the ride. They want your shares. They want you out of the way before the real move begins. Shakeouts are deliberate. They are designed to test the nerve of the speculator. If you are in too early, you have placed your capital in harm's way precisely when the market is preparing to launch its attack on the weak hands. A truly timed entry means you are entering after the initial volatility has subsided. You enter after the market has tested the new level and established a firm foundation. You enter after the major move has demonstrably begun and the PLR is accelerating. If you are shaken out of a position, if a temporary reverse drives you to sell at a loss, then your timing was wrong. It is irrelevant if the stock eventually moved your way 2 weeks later. You were financially wrong because you could not afford to stay in the game. Your timing failed the endurance test. The professional is willing to sacrifice the first few points of a move to gain the certainty of confirmation. The amateur rushes to the first point only to give back 10 in the inevitable retreat.
Dumb right here, guy. Crazy.
If you enter prematurely, you are forced to spend your capital reserves and your mental energy simply trying to survive the initial turbulence.
Only this one.
When the real move comes, you are either too exhausted, too undercapitalized, or too psychologically damaged to exploit it fully. The timing must be patient. It must be deliberate. It must confirm the risk is minimized before the
This one tried to run right here.
The doctrine of the pivot point.
Come on, break it. 106.
Moves often hinge on specific observable pivot points. These are not arbitrary lines. They are moments where the price confirms the reversal or the continuation of a significant established trend. A pivot point represents the decisive barrier, the accumulated history of either buying or selling pressure that must be definitively overcome. When a stock price approaches a ceiling that has held firm on 3 previous attempts, that ceiling is a pivot point.
Yep,
When
right
volume
here.
explodes as the price approaches this barrier, it means the market is gathering its strength for a final assault. These are the decisive moments when accumulated pressure finally breaks through a natural barrier, unleashing a torrent of follow-up
Right here.
capital.
Not
The
the
mistake of the
resistance.
novice
Heavy
is to buy
resistance right there,
and hoping
guys.
it breaks.
Right now, right
This is
here,
hope.
you see, go
This
down,
is
curve back up.
anticipating it is dangerous. You
Down
must
here,
allow
you
the
need to
stock
get
cross
out.
that critical threshold.
I put my
You
stop
must
down
allow
here,
it to trade
remember?
beyond
Right there.
resistance. And you must demand that it hold this new territory for several sessions. The requirement is confirmation. The market must demonstrate that the resistance is genuinely broken, not merely tested for a moment before snapping back. A 1-hour spike above a critical high is noise. It is often a final desperate.
Okay, here.
Seeing if you're pre-approved.
No
will
revenge
lower your
trading
credit
here.
score. With Capital One pre-approval, you can save.
Let me speak plainly to you, trader to trader, because I've lived through every one of the mistakes you're making now, and the worst of them, the one that nearly destroyed me more times than I'd like to admit, was revenge trading.
Revenge
You think it's a
trading.
matter of discipline. You think it's a matter of strategy. You think it's just because you're emotional, or because you had a bad day, or because the market surprised you. But no, it's far deeper than that. Revenge trading is a betrayal of your own self-respect. And every time you do it, you are trying to settle a score with the market,
Yep.
when the market doesn't even know your name. You see, in my earlier years, before I became the man Wall Street feared and studied, I believed the same lies you believe today. I thought the market owed me something. I thought if the market took money from me unjustly, I had to take it back, immediately, and with interest.
Yep.
The market
You
is
can
not personal.
talk about you
It is not
revenge,
your
try to
enemy.
revenge, take the
It is
money
not
back.
your rival. It is not your abusive ex. It is not the bully at school who finally needs to be taught a lesson. The market is a mirror, a perfect mirror of your greatest weaknesses. And when you lose, when your plan breaks, when a setup fails, the first thing the mirror shows you is not the mistake, but your ego. That little voice in your head that tells you, you can't let that loss stand. Get it back. You're smarter than that. Just one more trade. Look how quickly you can recover.
Exactly
You're
what
better
you
than
say,
it.
one more
Prove it.
trade.
That is the voice you listen to when you revenge trade. Not your plan, not your rules, not your experience, not your intellect, not your training, not the hours you
Look
spent
it up,
practicing,
guys, look it up.
not the confidence you gained.
Look at one. Oh, wait, why that candle, okay? Why always that candle? Just share some right here, guys, for you. Look at that candle right there. That's called short squeeze right there, guys. Do I need to sell all? No. No need to. No need to.
From watching my earlier lessons, the ones where I told you about timing, patience, and why even a perfect strategy cannot save the undisciplined trader. No, when you revenge trade, you listen to the weakest version of yourself. And that, my friend, is why you cannot stop. Because you have not yet learned to silence the part of you that wants revenge more than it wants success.
Yep,
Let me tell you something from my experience.
that can.
The market is never wrong, but your interpretation of it often is. Every major loss I ever took, and there were many, happened when I let my emotions overtake my judgment. And when I lost control of my emotions, I wanted to fight. I wanted to claw back the money the market had stolen from me. I wanted to punish it for daring to move against me. But the market doesn't feel pain, only you do. You might think your revenge trade is just another entry, a quick scalp, a fast recovery. A little over leverage just this once. But deep down you know exactly what it is, a desperate attempt to protect your ego from acknowledging that you were wrong. If you truly understood the market, if you truly respected the market, you would accept your losses the same way you accept your wins, with a clear mind and a steady heart. You've heard me say this before in my lessons about trusting your plan. Confidence is not loud. Confidence is not emotional. Confidence is not reactive. Confidence is quiet and built over time. It is built in solitude, in discipline, in reflection, in the moments when no one is watching and you choose the harder path because you know it is the right one. Revenge trading is the opposite of confidence. It is reactive. It is emotional. It is impulsive. It is the behavior of a trader who does not yet know himself. And that is the real problem you are facing. You are not fighting the market. You are fighting your own lack of self-control. Let me take you back for a moment. Years ago, I lost millions, not because the market was difficult, but because I wanted to be right more than I wanted to be profitable. I became reckless. I traded out of frustration, anger, impatience, embarrassment, all the emotions I eventually warned the public about in my writings. And every time, without fail, the same pattern unfolded. A small loss turned into a medium loss, which turned into a large loss, which turned into a disaster. And I know the pattern in your trading life is no different. You may hide it from others, but you cannot hide it from yourself. A stop loss gets hit, you say, that shouldn't have happened. You re-enter. No signal, no structure, no edge, just emotion. The next loss hits harder. You double size. You widen stops. You take trades you wouldn't normally take. You justify everything. You lie to yourself. You chase the loss until the market finally teaches you a lesson through force. And afterward, when the damage is done, when the day is ruined, when the account is bleeding, you sit there staring at your chart with shame rising in your chest, saying the same thing every revenge trader says. Why did I do that again? I know the answer. Because no one ever told you this truth. You are addicted to feeling in control. Revenge trading gives you the illusion of taking back control, even though you are losing it with every click. The moment you revenge trade, you are no longer trading the market. You are trading your emotions. Listen carefully. You cannot stop revenge trading until you learn to accept the loss the moment it happens. Not an hour later, not after you recover it, not after you've blown the day. Acceptance is the antidote to revenge. Not strategy, not indicators, not more backtesting, not chart patterns, not risk management alone. Acceptance. That is why in my previous lessons I told you, understand yourself before you try to understand the market. Plan your trade and trade your plan. Trust your timing. Do not fight the tape.
Exactly
because
what
every
I say.
one of those lessons was meant to lead you to this one. You cannot stop revenge trading until you stop believing you can outfight the market. You can only outthink it, outweight it, out-discipline it. This is the first step in breaking the cycle, not the last. Now let me take you deeper, because knowing why you revenge trade is only the beginning. If knowledge alone could save a trader, the markets would be filled with millionaires. But it takes more than knowing. It takes understanding. And understanding only comes when you examine yourself with the same precision you use to examine a chart. What you must realize is this: revenge trading is not about the loss you took. It is about the identity you attached to that loss. A beginner thinks a loss means they are bad at trading. An arrogant trader thinks a loss means the market is wrong. A fearful trader thinks a loss means disaster. A revenge...
All right, so good trade today, guy. Buy the dip right here. Look, buy the dip, 99. Buy the dip, 99. Sell all the way up here, 112. Sell many share right there. Sell right here, 108. Ball plot right here. Plan your trade, guys. Trade your plan. Plan your trade, trade your plan right there. Ball plot. Always ball plot. It hold right here good. That means the short under water right now. Ball plot at resistance, that's normal, that's classic. Okay. When you have resistance right here, you have the ball plot. Okay, that's all. Okay, let it pull back and see what's going on. Check the volume right here. The volume decrease. When it increase, that's good. You try to dump right now. Happen all the time, guys. I have small side right there. Maybe you can pull back all the way to 105. That's a nice ball flash. Last short right there, short and profit taking right there. This one hurt, guy. I sell too early on this one. This one you can jump in right here. I sell right here. Look, it's 640. Sell, sell, sell. Three couple hundred share, 1,000 share, 100 share, 500 share, 10 share, all over, guy. You don't need to trade a lot. You don't need to. You trade your emotional, guy. If you can control your emotional, that's all you need. Size matter. That's a nice ball plot right there. See what's going on. Break it. 13. Break 13. Where the volume? Need volume. Right here, look at it, guy. I say break right here, remember break? I say question mark, you need break right there to go up here. Resistance up here. When you go up there, ball plus. If not go ball plus, it come down all the way back here. Look at here. That's the plan right there, guys. That's the plan. See the plan? Plan your trade, guys. Look, boom, right here. Look at that. I don't know why, but I can see it. 13, need to break 15. One more, 10 more cent, one more cent. Come on. Look at level 2, 112. Cannot break it. 14, yep. The dumb right away, crazy guy. With the dumb right away. That's crazy. Another dumb, we try to dumb right there. They try to dumb right there, guy. Come on, hold on, till 14. Need break 14. Man. Sell somewhere. Just sell some right there with the price 14. Good. And not sell all. $16, good. Very choppy right here, 15. 15 very heavy, 15 guy. You see daily chart right here, 15. It dump right there, right away, guy. Look at dump right there. You guys see that? Man, resistant. Ball flat, dump. Dump right there. Another ball blast here, see? They scare you out right there. Not easy, guy, not easy.
Revenge trader thinks a loss is an attack that must be answered. But a professional, a true professional, understands that a loss is simply the price of doing business. No more, no less. And this, right here.
This is how you can lose the weight the way you want. Weight Loss by Hims offers access to a variety of options.
Is where most traders fail. You see, you have created an identity around being a good trader, and every loss feels like a threat to that identity. You don't trade to execute your plan, you trade to protect your self-image. And when that image is wounded, you fight. You don't treat the market like a business, you treat it like a battlefield. But the market is not a war. Wars end, markets do not. If you try to fight a never-ending opponent, you will exhaust yourself long before the market even notices you exist. I learned this the hard way when I was young and stubborn. I would lose a trade and feel a fire in my chest, a need to strike back, to show the market it had embarrassed the wrong man. I had the skill. I had the instincts, but I lacked the humility. Humility is the most expensive lesson Wall Street can teach, and most traders learn it only after losing far more than they ever intended. But let me share something I learned after decades of trading. Revenge trading is often a sign that you entered the market for the wrong reason in the first place. You think you entered because of a setup, but deep down you entered because you wanted action. You wanted excitement. You wanted the rush. You wanted the comfort of feeling in the game. A trader who enters out of boredom will revenge trade out
some
of
right here.
desperation. A trader who
You take some profit. And FOMO right here, right now. I let it short squeeze, guy. It's crazy. I dump right here to buy. I buy the dip right here. Crazy, guy. Crazy. That's a good trade. All right, let's sell some here too. Yep. 121, sell 121. Try to dump right there. They scare you out right there. Try to scare you out right there, guy. Crazy, huh? 120 resistance right there. I think maybe I'm sell all right now. Let's see. One more hit, I'm out. He tried to break right there, 120 right there, guy. Right there. Just cancel it. You need to break 120. Look here, daily chart, guy. Look at here. So I see that? It hit right there. That's a daily chart right here, guys. $120 resistance right there. I just sell here. Keep selling, guys. Keep selling. I sell resistance, that's all. Right here, resistance. Just sell right there, resistance. Try to dump right now. I just sell it. Let's see it build a ball flat at the resistance or not. Okay, it happens all the time. If not, it's coming down. Okay, right there, resistance, ball flat. You can see that. All right. So this one 115 and 120. Okay, that's two resistance. You see right here, it hit the ball flat at 115, and then it go to 120, another ball flat. If this one coming down, you need to get out. It come out down right now. See, I'm out. This candle, we try to reverse right there, guys. We try. And the volume right here is too high, it not go higher. So I have only 10 shares left, bro. It's fun, guys, very fun. Okay. Right now I put for fun right here. Okay, 10%. Okay, over here, under here, I'm out all 13. Couple shares left, right there. Just study. Just follow my discipline, that's all. Look at sharing, look. Right here, 116. Sharing right here. 120. $120. Make almost 20% or 30%, guys. That's all. That's all I need. My average is 102. My average probably 102, guys. Okay, here's the plan. Here's the plan, guys. Plan your trade, trade your plan. Here's your plan. You see right here, resistance. It built a ball flat. Okay, break the ball flat. Pull back right here, resistance. Break out. Right now, another resistance right here. This heavy resistance ball flat. If this one ball flat break, go higher. If not, you dump it. Okay. If not, the fall all the way down here. It break here, it go all backside. That's it. Let the market tell you what to do. When it break right here, 115, that's the backside. Try right now. Always. Remember right here, I say be careful, ball plus. Look at that guy. Real thing, guy, not Mickey Mouse. You play your emotional, guy. You can control your emotional, that's what you need. Fine later. That's a nice ball flat right there. See what's going on. Last short right there. Short and probably taking right there. And right here, told you. This one hurt, guy. I still too early. This one you can jump in right here. You see right there? I say ball flat right there. It's 640. Zero. Exactly, huh? Look at that guy. You see that? That dump right there, backside. Resistance support right there. What I say right here, look. Right here, the line. Try to dump right there. Huh? Right here need to hold resistance. When you break resistance, A plus header, you can jump 121, 123 right here, you can jump in. And you see what's going on, that's all. Try right there, break right here, crazy. You try to touch right there, crazy guy. You touch my stop right here, I am out right here. Small side, like 113, 10 share left. That's crazy. Crazy guy.
Enters out of fear will revenge trade out of panic. A trader who enters out of ego will revenge trade out of pride. But a trader who enters out of discipline, that one never revenge trades because he never feels the need to. Let me remind you of something I said in one of my earlier lessons, the one many of you keep replaying.
Look at that guy, see, crazy, huh? The last shot right here got squeezed. Look at that guy. It scare you out and break the ball flat. Woof, fucking shit. That's a good one, guy. Nobody one lesson. Oh man, the ball flat perfect. Look at that guy. Here's the plan right here. Ball flat. Boom. A plus setup. 123. That's okay. You never know. You have to take profit and react only. May not break it. That's it. You see the moon. Crazy. It took me out right here and then it started to curve back up. Lucky I have small side. It down right here. Perfect. This is perfect chart, guys. Very good chart right here. Let me take a picture of this one and copy it. Give it. Here's the plan. resistant ball plot. Okay, resistant right here, ball plot. Right now, this one become support right here, 120. Where is it, guy? That's a good chart. Wait and see chart right here, guys. That's a good chart. Pmcb. Save it. Where is it? A good chart, huh? That's a good chart, guys. Very good chart. All right, this morning right here, I buy right here, look, 107, and sell some right here, all the way right here, okay? And then I buy right here, look at here, and sell all the way up here, sell. Because resistant right here, I sell. You pull back, become the ball plot. You see right here, resistant ball plot? Resistant blood ball plot. All the way, guy. But keep going high, and when it break, when it break, guys. Look at it. When it break, guys. All right, I'm done. Bye, guy. Finish. I'm done. Bye-bye.